Yeah, I got this shit on lock. Time is money, TikTok. I'm going digital like G-Shock.
What's good? What's good? It's your boy Matty Ice Cold Crypto, coming to y'all today, man. Wanted to do a video today talking about stable coins, man. You know, stable coins have been on the rise lately, and I wanted to do a video, man, talking about actually what are stable coins, man. For those of you who don't know what they are, not familiar with stable coins, and also want to talk about why major institutions are getting involved with stable coins now, man. Why they paying attention to it, and need to pay attention to stable coins, man, and how we can benefit from the rise of stable coins. So, man, let's get right into it. We'll talk about stable coins. So man, let's take a look right here. We're gonna go right to Wikipedia. So stable coins are cryptocurrencies designed to minimize the volatility of the price of the stable coin relative to some stable asset or basket of assets. A stable coin can be pegged to a cryptocurrency, fiat currency, or exchange traded commodities such as precious metals or industrial metals. So, you know, we're going to be focusing on stable coins, so they could be backed or pegged to things like gold. So the price of that stable coin will fluctuate with the price of gold, or it can be pegged to a dollar, to fiat currency like the US dollar or the euro or something like that. So let's see what else they got to say. We got backed coins, commodity backed coins like gold and silver. And we have the fiat backed coins. Actually, what we're going to be focusing on today is the fiat backed cryptocurrencies. So here we can see the value of stable coins of this type is based on the value of the backing currency. That could be the US dollar, let's say, which is held by a third party regulated financial entity. So it'll be a company or something holding this currency that the stable coin is backed by. In this setting, the trust in the custodian of the backing asset is crucial for the stability of the price of the stable coin. Fiat-backed stable coins can be traded on exchanges and are redeemable from the issuer. The cost of maintaining the stability of the stable coin is equivalent to the cost of maintaining the backing reserve, you know, keeping that amount of cash in the bank on reserve, and the cost of legal compliance, maintaining licenses, auditors, and business infrastructure required by the regulator. Cryptocurrencies backed by fiat, by dollars, are the most common and were the first type of stable coins on the market. And you know, their characteristics, they're valued 1-to-1 with most currencies like the US dollar or the euro. The tether is realized off-chain through banks or other types of regulated financial institutions, will serve as depositories of currency used to back the stable coin. So you have currencies on the back of these stable coins. So that's kind of what a stable coin is. So let's take a look at, you know, different types of stable coins and the differences, and why, man, these companies are getting involved, and why, you know, I'm getting involved with stable coins. And you know, you might want to learn more about them and check some stable coins out too. So right here we can see there's a list of stable coins. The OG, if you're familiar with stable coins, you definitely have heard of Tether. USDT is the largest stable coin by market cap. You can see $8 billion, almost $9 billion worth of Tether circulating in the market. So let's click on here. Let's look a little bit about Tether, see how it works. Tether's been around since 2015. Like I said, it's the OG of stable coins. And kind of you know, stable coins were originally I want to say invented, or the reason why they began to use stable coins is because you know, traders or people in the cryptocurrency market were looking for a way to pull their money out of the volatile crypto market but not go all the way back into the banks or into the fiat currency. So they wanted somewhere where they can actually sit their money to get out of the market, so they can actually realize some of their gains without actually coming all the way out the market and still being liquid to come back into the market. So they created Tether, where they actually, it was still a digital currency that can be held in a cryptocurrency wallet that could be easily transferred to and from exchanges or be held right on exchanges. And then they actually begin to trade it right against the price of Bitcoin on most exchanges. So that's how coins were kind of birthed, for traders. So you can see it was the description. It's a stable coin targeting a $1 peg. It was created in 2015. It stays as close to as $1 as possible. It's on multiple exchanges, and originally it was launched on the Omni protocol that was on the back of Bitcoin. But since then, Tether has put other stable coins in circulation on the back of other blockchains such as Ethereum, EOS, Tron, and Algorand. And all of these Tether coins on these different blockchains are all pegged and backed by the US dollar, so they can always be redeemed for $1. So if you take $1,000 and get $1,000 worth of Tether today, you're going to have $1,000 worth of Tether tomorrow. And that's how it should work. So you're in the cryptocurrency market, but you're not seeing the volatility that you would see if you were to buy $1,000 worth of Bitcoin. Tomorrow it could go up 10% or it can go down 10%. So the stable coin protects you from that volatility. So let's take a look at a few others. The second rank here that a lot of people use is the USD coin. I believe this is by Circle. You can get it on Coinbase and a lot of other exchanges. So this one here is the USD coin. Is a stable coin that is backed by the US dollar, and it allows users to move dollars value anywhere in the world in minutes instead of days. So with that being said, that's kind of why these companies are paying attention to the stable coins, because originally it was just kind of for traders to get in and out of the market. But as time progressed, they started to see how flexible these stable coins were, and they realized how easy it was to use stable coins for payments and do cross-border transactions. And they saw that it allowed them to settle cross-border transactions instantly, where before, like dealing with banks, you have to go through the Swift account. It could take days or weeks sometimes for you to transfer large sums of money overseas. But with a stable coin, you're able to settle these transactions almost instantly. Someone could send you $1 million in US dollar Tether directly to your wallet. And once it confirms on whatever blockchain, the Ethereum blockchain, within a few minutes, that transaction is done, versus try sending $1 million through the Swift system. There's going to be thousands of dollars in fees, and it's going to take days and weeks and a bunch of red tape and questions asking about what you're doing with that money. But they realize the ease of these stable coins. So not only are people using them for trading now, but they're being used in real world business. So that's just one of the reasons why it's interesting to me, but that's why these large companies are paying attention to it. But again, why should you care about a stable coin? Let's say, for instance, you're not doing any cross-border payments. You're right here. You have your bank account. You're just fine. You're transferring money. Now they have Cash App. They have things like Zelly, that or Zelle or whatever it's called, so you can transfer money between banks a little more easy now. But we still know that system is still out of date. You should be able to send money as easy as you're able to send email, but we all know that's not the case. Sometimes it still takes days for ACH transactions to go through or for your money to clear. It's gotten a lot better. It may only take 2 to 3 days, but money should be instant. Payments, we're moving into an instant payment world, and cryptocurrencies allow for that. But before I get to rambling, let's talk about why you should pay attention to it and how you can benefit from it. But let's follow the money so we can actually see some of these major companies who are getting involved in these stable coins. So first, we're going to take a look at JP Morgan. JP Morgan, this is an old article on CNBC from back February 2019. We can see that JP Morgan is rolling out, talked about rolling out a cryptocurrency. And you know, before JP Morgan's Jamie Dimon, he actually bashed Bitcoin, called it a fraud. And said that he would fire anybody who dealt in it. That was back in 2017, but then we subsequently found out that he actually was a buyer of Bitcoin behind the scenes, and that he was just saying these things to actually drive the price down so he can accumulate more. But JP Morgan has a cryptocurrency called the JP Morgan coin. So we can see right here, this is a little more updated. This is March 20th, 2020. JP Morgan is to launch their JPM coin. So we can see right here, let's read a little bit of this. JP Morgan Chase and Company has officially become the first U.S. bank to launch a digital token representing fiat currency. And if you don't know, JP Morgan is the largest bank in the United States. It's not, you know, me and you can't go in there, but they deal with large institutions and different things like that. But JP Morgan is the largest bank in the United States. This bank announced the creation of the JP Morgan coin back in February 2019. You can just see that article we just looked at. The JP Morgan coin uses blockchain technology that will facilitate transfers of payments between institutional clients. So this will be a centralized coin. It's not a cryptocurrency. It's not like Bitcoin. This will be something that's centralized, but it will be a digital token that they're able to send and receive through wallets. This coin is fundamentally different from cryptocurrencies like Bitcoin. Most specifically, it is redeemable at a 1-to-1 ratio to the fiat currency held by JP Morgan. The JP Morgan coin still part of the company's plan for the future as of 2020. JP Morgan coin is a proposed stable coin that JP Morgan plans to redeem for US dollars on a 1-to-1 basis. Next, when it launches, the JPM coin will only be available to large institutional clients of JP Morgan, not individual users. So, man, you won't be able to get it. JP Morgan coin is designed to speed up transfer of funds. JP Morgan is still developing the JP Morgan coin in February 2020. The JP Morgan coin is primarily a tool to help instantly transfer funds between some of JP Morgan clients. Such a digital currency is needed for exchange of money to take place between parties on a blockchain ledger. JP Morgan coin is a tool that helps to complete that process more efficiently than traditional settlements. JP Morgan coin is not money in the ordinary sense. Instead, it's a digital token that represents US dollars held by JP Morgan Chase. It maintains a value equal to $1 US. If JP Morgan Chase deems the launch of the JP Morgan coin to be successful, the bank plans to use it with other fiat currencies in the future. It will be a relatively straightforward for clients to use the JP Morgan coin. First, the client deposits a sum in a particular account and receives the corresponding JP Morgan coin. Next, these coins can be used to facilitate transactions across the blockchain network with other JP Morgan clients. Finally, the clients may redeem their JP Morgan coins with the bank to receive US dollars at any time. While JP Morgan coin is similar to other stable coins, there are some crucial differences. Most stablecoins are open access and available to the public. On the other hand, JP Morgan coin will only be available to specific JP Morgan clients with proper permission. In particular, these clients must be institutional customers of the bank. JP Morgan coin is designed to facilitate the transfer of funds, while most stablecoins are seen as investment tools. Finally, JPM coin will always be redeemable in fiat currency held by JP Morgan. So we can see one of the largest banks in the world is interested in stablecoins. Not just interested in stablecoins, they're creating their own stablecoins that they can use in house to facilitate cross-border transactions between customers, because they see that it's just a lot less friction than the traditional way of doing business now. So they're moving over to a digital based currency. So this is more proof that digital assets are the way of the future. Let's move on. This is more proof. Again, this is JP Morgan again. They're getting into cryptocurrency. JP Morgan's opens accounts for Bitcoin exchanges Coinbase and Gemini. Coinbase and Gemini are the two largest exchanges here in the United States. Coinbase is one of the largest crypto exchanges in around the world. Besides Binance, I believe Coinbase may be number 2. I'm not sure. I take that back. But Coinbase is one of the largest exchanges around the world. Let's see what they're doing. So historically, it has been difficult for cryptocurrency exchanges to secure reliable banking relationships for fear of fraud and money laundering. Something that has led them to rely on sketchy payment processes instead. The news then is particularly significant, not just because JP Morgan's staunch stance against cryptocurrencies in the past, but because this could open avenues for better banking relationship for Bitcoin companies going forward. They could be trying to be strategic that these coins could be that their JP Morgan coin could be on Gemini, because Gemini does have a Gemini dollar. I didn't actually show that, but we can go here. So the US dollar coin, that's on Coinbase. True USD, Paxos Gold, that's actually I didn't show this. This one is actually, so you can see the price of it is going to fluctuate with the price of gold. So you actually can get a stable coin and get some exposure to gold if that's what you want to do. So you can see the Gemini dollar here. So Gemini dollar. These are, if you're not familiar, this is the Winklevoss twins, who was in the thing with the movie, the Facebook movie with Mark Zuckerberg, won the big lawsuit. They invested in Bitcoin and you know, some of the pioneers in the Bitcoin space, and they own an exchange called Gemini Exchange, and they have their own stable coin called the Gemini dollar. But they're with doing business now with the world's largest bank. JP Morgan are going to hold their accounts now. So I believe that's big. I believe we're going to see more stuff coming from that. And then also, this news, or people not really realizing how big this news is just yet, is Visa. Visa applies for a digital dollar blockchain patent. So what does this mean? So the U.S. Patent and Trademark Office published today that Visa has filed a patent application to create digital currency on a centralized computer using blockchain technology. This patent applies to digital dollars as well as other central bank digital currencies such as the pound, yen, and euros. And so the physical currency of central banks anywhere in the world could be digitized. Read that again. Central banks anywhere in the world could be digitized. Described as the digital fiat currency, the patent was initially filed by Visa on November 8th, 2019. It takes quite a while to publish a filing of this patent. Visa's patent is described as a central entity computer that receives requests that include the serial number and the and the denomination of the physical currency. The creation of the digital currency and the removal of the physical currency from circulation in a fiat currency system is recorded on the blockchain. So they're asking for a patent where they can actually issue and take physical currency out of circulation, take that serial number out of circulation, and turn it into a digital dollar and put it on the blockchain. So they're removing dollars and turning them into where they'll live on the blockchain now. So we can read through here, man. You can check out this Forbes article if you want to read through it more in depth. We want to skim through it. Let's go right here. Congress considered the idea of a digital dollar when debating the CARES Act. Although the digital dollar was not included in the final legislation, separate bills have been introduced in both the House and the Senate that looks to legally create a digital dollar at the Federal Reserve and also a digital dollar wallet at the U.S. Treasury. The digital dollar has been suggested to provide economic stimulus benefits and possibly universal basic income to Americans. And Visa has applied for this patent, so you can actually see a kind of a portion of the patent here. You know, patents and everything, that's all public records. So you can see right here, applicant Visa International Services, and their patent for a digital fiat currency. They actually have a demonstration here talking about how the money will come out the ATMs, how they'll turn the money into a blockchain here, how they're taking money out of circulation, the serial numbers, and turning it into a blockchain. So man, this is very interesting. I think this is huge right here. Just Visa getting involved in cryptocurrencies just shows the times that we're moving in. They're filing a patent to create digital dollars for central banks, where they can take dollars out of circulation. So not just it seems like dollars that are backed, like Stablecoins or the JP Morgan coin that's actually backed by dollars that they hold in a bank. Visa sounds like they're getting involved with central banks, that they are actually able to issue money, you know, so the central bank can give them a certain amount of money and say, hey, we want to take this $1 billion out of circulation, this physical cash, and it'll never come back in circulation, and we want to issue it digitally. And they can issue that digitally through these stimulus packages. Everybody has Visa cards. They're already giving Visa cards out, so they can actually issue these Visa cards and give everybody these digital dollars that the government is now magically creating. So I think, man, we definitely need to pay attention to these stable coins and what's going on with these digital dollars, because this is the way of the future. But how do we benefit from it? How can you benefit from the rise of these stable coins? You're not doing cross-border payments, but you do have cash in your bank. And if you know anything about how banks work, you know that they take your deposits and then they take most of your deposit, up to 90% of your deposit. I think they don't even have any requirements anymore, but they take your money and then they loan it out to your neighbor, to someone else, and then they go deposit it in their bank account, and then that bank does the same thing. They go loan the money out, just infinite money creating. And when they loan this money out, what do? You pay interest on it, but they don't pay that interest back to you. They loan your money out, but you get no interest on it. If you're holding it in a checking account, you're not getting anything. And if you're holding it in a savings account, you may be lucky to get 0.25% on an average savings account per year. If you're not in the money market account or anything like that, you're not getting more than 1% on your money yearly. But what I wanted to show you is how you're able to take these stable coins in your cryptocurrencies right now and actually hold it in some, earn up to 12% yearly on your stable coins. You can earn 12% yearly on your money. You're not going to see that in any CD. You're hard pressed to try to beat that, even putting it in the market to trade. But just for holding your money, you can see up to 12%. There's a couple of them. I want to go through it right quick, and I'm going to do a more in-depth review on both of these sites and show you how to set up an account and how to get started. But if you just want to take, we're going to take a quick look at it, and we can see exactly how you can begin earning money on your stable coins and even on your crypto. Like I said, up to 12%. It's very easy. So the first site that we want to check out here, you can see it's called crypto.com. Crypto.com, they started off as Monaco. They've been around for a few years. They have a great app. But what they do here, they allow you to buy, sell, and pay with your crypto. They have cards, so you can attach a debit card to this crypto that you're going to be earning interest on. So it's liquid. It's just like having it in a bank. You can swipe and use it. I wouldn't buy anything with my crypto right now because I believe the price is going up, but you do have the ability to spend your crypto. But then again, we're talking about stable coins here today. You can actually have your stable coins in here that you're earning interest on. But then if you need to use it, you have the ability to use it with either a debit card that they issue, or you can always liquidate it and take it back to your original bank account. But this is the whole point of getting unbanked, is to pull that money out of the banks because they're using it and not giving you anything on it. So you can bring it here, earn monthly interest on your money, and still have the ability to use it freely with a Visa debit card. And also, I didn't mention, let me leave down here, it talks about how Visa is partnering with Coinbase. Additionally, in February this year, Visa announced that it has granted permission to Coinbase, a cryptocurrency exchange, permitting them to issue a debit card where individuals can spend their crypto through the card. So you can see Visa is also partnering with Coinbase. So you can come here and earn up to 12% on your stable coins. Simple interest paid weekly on your crypto. Deposit Bitcoin and get paid interest on it. So you can actually receive more benefits from being a customer of theirs if you actually stake their MCO tokens. When you stake their tokens, you would have to purchase a certain amount of their tokens and hold them. You're done staking the tokens, you can actually sell those tokens, so you still have possession of it. But for being a token holder of theirs, they'll give you more benefits. So you can see you'll earn up to 12% if you're staking tokens. But let's just say you're not staking tokens. You just want to come here, buy some stable coins, and begin earning on your crypto and your stable coins. So off the supported cryptocurrencies here, if you hold it on a 3-month term, they have 3 types of terms that you would have to hold it on. I want to get to another site that you don't have any terms. It's completely liquid. But here on a 3-month term, your funds would have to be locked up for 3 months. And you can see you would get 10% per year on any money that you have locked up on these 3-month terms. So you would have to do it 3 months consecutively to get that total 10%. But every 3 months you would have to reinitiate you would basically have to stake your coins for another 3 months, and over that year you would get 10%. So if you was to just do it for that 3 months, what's that, 2.5% over that 3-month period. So you would see 2.5% in 3 months. You do it again for the next 3 months. You actually can compound your money. Then you would put that 2.5% on top of that money and reinvest it for another 3 months, and now 2.5% again. Now you're at 5% over the 6 months, and you do that for the year, you would see 10% on your money. Or you can do a flexible one where you don't have to put it in for any time. You can just put it in and you're going to earn 6% on your money and up to 2% on supported coins. So that's huge there. You're not going to see that anywhere else. You're not seeing that in CDs or anything. There's very little risk. There is third-party risk because you are holding your money in a third-party app, just like if you were holding it in a bank. But I feel pretty confident with crypto.com from what I've been seeing, and from my research. You want to do your due diligence, but I feel pretty confident holding my assets here. So you can see some of the tokens that they offer. So you can put Bitcoin here if you're holding Bitcoin and earn interest on it. You can see you can earn up to 2% and up to 6% here on your Bitcoin. And here are the stable coins. So again, you can see Tether. You can see the US dollar coin. You can see Paxos. You can see True USD. So you actually could come here and purchase these coins and begin earning on your crypto. The other site that you're actually can actually earn on is Celsius, man. I actually love Celsius. Here, Celsius is similar to crypto.com. They don't have a debit card. You just put your money here and you begin earning. There's no minimum. It's very straightforward. There is no time limit to have your money locked up. You just put it here, you start earning, and when you're ready to take it off, you withdraw it, and you receive your payments weekly. Every Monday, like clockwork, you'll receive your interest payment, and it compounds. So you can be receiving Bitcoin weekly, you can be receiving your US dollars weekly, and it continues to compound. So let's scroll down here. So again, it's an app. You can earn, borrow, and pay on the blockchain. So it tells how many active wallets they have, how many loans they have out, and that's how we make our money here. They loan cryptocurrency out to different margin exchanges and to different institutions. And when those institutions pay back the money on their loans, they pay 80% of that back to us. So that's how they make their money, and that's how we make our money. So they have cash loans. You can borrow against your cryptocurrency if that's what you choose to do. No credit check needed. You just put your cryptocurrency up as a collateral and you borrow against it. But we're focusing on earning on your crypto. So earn on your crypto. You deposit here and you begin earning weekly. So this is how it works. Turn your turn to earn crypto. So you can earn up to 12% yearly by holding your cryptocurrency here. Let's go down so you can actually see how it works. So let's say, for instance, you had $1,000, and we've been talking about stable coins. So let's say you took $1,000 here and you came to USDC coin. So you would earn about $1.55 weekly in US dollar coins. So every week they would deposit an additional $1.55 into your Celsius account. If you're holding your money in a bank, how much do they pay you weekly to hold your money there? Nothing. So you could take that $1.55 and compound it, and this number isn't even compounded. Just over a year, you'll see $80 in interest on your $1,000. But if you compounded it every week, adding this $1.55 back on top, you would actually earn a little bit more than that over the year on your $1,000. And then if you earned it in their sale token, you would actually earn even more than that. You would see you would earn $2 a week and $110 in interest if you earned it back. But if you just wanted to get it back in those US dollar tokens, coins, a stable coin, this is what you would receive weekly. And man, that's game changing. That's game changing right there. So you can see the coins that are here. Again, we're focusing on the stable coin. So you can come right here. You're seeing you're receiving 8%, 8.05% on your money monthly that you're holding here. And they pay it weekly. I said monthly, but they pay it to you weekly, and you can withdraw that money just as fast as you put it on there. It's not tied up for any time. So I believe that's powerful, and I believe everyone should take advantage of these stable coins, the rise of these stable coins. You have money sitting in a bank that you're not earning any interest on. The banks are loaning it out, and they're making money on it, charging you fees, overdraft fees. They hold your money hostage and don't give you any rewards for it. We don't have to stand for that anymore. You see companies like JP Morgan is getting involved in stable coins. This is our chance to move when they are moving, to take advantage of something new at the same time that they're taking advantage of it. Like we're early adopters and they're just getting into the game. Like they were just talking bad about it, so we have a leg up this time. You can pick up your cell phone and go right on your cell phone, grab an app, download an app, and start pulling value out of the old system and start hedging your bets in this new system by acquiring stable coins and even other cryptocurrencies, because you can bring your Bitcoin here and you can earn 4% yearly on your Bitcoin. So not only are you seeing the appreciation in value in Bitcoin, you're also going to see the appreciation because you're going to be getting Bitcoin payments to your wallet every week. So if you're holding Bitcoin here, let's just say we're focusing on stable coins, but let's just say you came here and you had Bitcoin, and let's say you had 1,000 Bitcoin, man. Wow. But let's just say, man, the average person, let's just say you have a 0.1 Bitcoin. That's about less than $1,000 right now at the price. But you would see you would be receiving 0.76 in Bitcoin weekly. They don't pay it to you in cash, or you'll be getting that in Bitcoin. So that amount of Bitcoin will be added to you weekly, that percentage of Bitcoin. So as the price of Bitcoin continues to rise or goes down throughout the year, you'll see that, but you'll be getting Bitcoin deposited into your wallet every week. And they have Pax Gold, so you can be actually getting gold deposited to your wallet every week, man. I think this is a great invention, a great way to earn passive income off money that you may have sitting in the banks, that's not earning any money for you. And the great thing about it is not tied up. It's not in a CD. You can withdraw it and use it as you need it. So don't want to do this be too long on this video, because I'm going to do a more in-depth video of crypto.com and also Celsius. Right quick, let me see if I can actually show you. I want to show you a little bit of Celsius right quick if I'm able to. So here we go. So we have so this is crypto.com. This is how the app looks on crypto.com. Once you log in, this will be the screen here. You see, you can come here, man. This will have a layout of all the different coins. But what you would do, you would come right down here, click here, and then you would say you want to earn. Come here and click earn. You can see same thing, earn up to 18% on your assets. We're not going to do any of the staking. We just want to earn. So you would come down here and you would decide what coins you wanted to deposit. So let's say you wanted to, we were working with the USDC coin. Up, you earn 10% on it. So you can just click start earning. You would select the cryptocurrency that you would want to deposit. US dollar coin. You would come here. You would select the terms. So flexible, where you don't have to lock it up for any time. You're going to receive that 6% per year on your money. If you do it at 1 month clips, you're going to receive 8%. If you do it at 3 month clips, you're going to receive 10%. You come here, you select what you wanted to do. You click continue. You go through, you click that you understand, and you agree to the terms, and you begin staking. It's that simple. And also what I love here, you're actually able to purchase cryptocurrencies very easily with a debit card. I don't even think I had mentioned that, but you're actually able to right now through June, there's actually no fees to buy any type of cryptocurrencies here. No debit or credit card fees. So you can come here and say you want to, let's buy some cryptos. You can click buy. You can select any coin that you want to buy here. You would select the coin, you would select the amount, you would just have to enter your debit card, and just like that, that coin would be in your wallet and you can start staking. And a great app to get started, very easy. Again, want to do some more videos and some more tutorials on exactly how to use Celsius and crypto.com, but today just wanted to give y'all an overview of what stable coins are, and why institutions are getting involved in it, and why and how we should get involved so we can take advantage of these rise of these stable coins. Like this is just a great opportunity for you to earn money, to have your money work for you. I don't know any other way to say it. It's just whether or not you actually want to put a portion of your assets into these sites like crypto.com and Celsius, whether or not you have enough trust in them to hold your funds there. And that's for you to decide. So definitely want to do your due diligence. I hope this video did help some. And again, I will do a more in-depth review of crypto.com and Celsius network. But again, stable coins, check them out. I believe stable coins are the way of the future. Great way to earn some passive income. Hope this helps. It was your boy Matty Ice Cold Crypto. Have a great one.